Can a Hong Kong company truly be tax-free? In this episode, we're gonna find out. My name is Rusudan. I have been working with Nomad Capitalist for the last 4 years, helping high net worth individuals legally reduce their taxes and go where they are treated best. In today's video, we're going to ask the question, can your Hong Kong company be completely tax-free? And the short answer to that is yes, it can, but it has some nuance. Let's first dive into why we are always mentioning Hong Kong companies when we are talking about tax-free jurisdiction. So that comes from the fact that Hong Kong has a territorial tax system. It means that they tax on Hong Kong earned income, and if you have a foreign earned income, it is not taxed in Hong Kong. However, there's a very specific criteria that you have to meet to make sure that Hong Kong Inland Revenue Service does not deem your revenue Hong Kong earned and actually considers it foreign earned. So the first thing that you have to think about in this situation is the fact that Hong Kong has a corporate income tax for Hong Kong earned income. And at the current moment, it stands at 16.5%. So it means that if you're not careful and if you do not fully comply with the criteria that the Inland Revenue Service has set for businesses, your income can be taxed in Hong Kong. There are rules, and if you follow, you can make sure that your tax bill is 0%. What you have to do is make sure that your operations are considered offshore. So basically, any business that is incorporated in Hong Kong has an option to claim offshore tax rate at 0%. There are certain criteria. For example, if you have connections to Hong Kong, if you have an office there, if you have employees there, it means that most of your revenue will be considered generated from Hong Kong. So you will not be eligible for the offshore tax claim. But if you have a company there and if your business activities can be conducted from any other place and they are not physically connected to Hong Kong, you don't have employees there or you don't have clients there that are Hong Kong citizens or residents or Hong Kong businesses, then you can apply and request offshore tax claim. Every year you need to provide Inland Revenue Service with your financial statements that have to be audited and file your revenue report and confirm that all your revenue is generated outside of the country, and they will confirm that you can pay 0% tax. So this is the summary of how it works. Now let's go and dive into a bit more detail. The first thing is that they do not trust your word. You have to make sure that you have proof in form of documents. And while Inland Revenue Service may not ask for all your agreements and invoices, you do need to provide that to the auditors. So the way the process goes, you have to make sure that you have limited connections to Hong Kong. So basically no employees there, no clients there, no office preferably. And if you have a bank account, it has to be remotely operated. So once you make sure that these are met, and also pay attention to the activity. This is not a template for every business. If your business is connected to some specific a real estate or something, of course it will not be considered offshore. It will be considered operated through the Hong Kong company from Hong Kong, and that's why you will not be eligible for the 0% tax. What helps in this situation is being compliant, talking to a tax advisor who's going to tell you exactly, are your business activities considered being generated, the revenue being generated outside of the country or not. So be very specific. If it's an e-commerce, if it's services that are provided remotely, of course you have higher chances of complying with the criteria and being deemed for revenue. But if you are not, if you have physical things, if you're producing something in Hong Kong, you will not be able to enjoy 0% tax in this situation. Now the actual process, how it goes. So you incorporate the company in Hong Kong, but that does not automatically mean that you can pay 0% tax. So any company that is incorporated in Hong Kong automatically has to pay 16.5% tax. But if your business is considered offshore and if your business is considered as operating outside of Hong Kong, then you can claim 0% tax. And the way that it goes is every year, when the calendar year ends, you have to file the revenue report with Inland Revenue Service and ask them that all my revenue is generated outside of the country, so please prove that I have to pay only 0% tax. And for them to even consider your claim, you need to also submit your audited financial statements. So this is where your documentation request comes in. So maybe Inland Revenue Service will not check every invoice and every agreement, but the auditors will. So you have to have accounting books. You have to maintain all the documents. You have to have transactions and everything documented so that the financial statements can be audited by the independent auditors. So what they do every year, they check the financial statements, they go through the revenue lines and make sure that all the revenues are actually generated outside of Hong Kong. And once they confirm that, they give you the report, audit report, that is submitted to the Inland Revenue Service. So that is the procedural part of how the tax revenue generation from Hong Kong company would work. We do have a couple of misconceptions that when I'm talking to, for example, our clients or some people, we had the Nomad Capitalist live and it was brought up to me in the audience, some of the misconceptions that you can face when you're thinking about incorporating in Hong Kong. And the first thing is just having a company there doesn't mean that you don't pay tax. We've covered that. We know that we need to have a special request. We need to make sure that every year all the revenues that are generated are actually tax-free and are considered and deemed to be outside, to be foreign source income and not Hong Kong source income, right? The other misconception is that you don't have to have any documents, or because you don't have any presence in Hong Kong, you don't even need to keep any documentation or something. That cannot be far from truth, because you have to have like pretty much every document, every invoice, every agreement, and you have to make sure that when asked, you can provide that, for example, this client actually is not from Hong Kong, because having a client in Hong Kong gives you substantial connection to Hong Kong that may prompt the revenue service, Inland Revenue Service, to think that this revenue is generated in Hong Kong and thus needs to be taxed at 16.5%. So be careful there and make sure that everything that you have in your head is documented somewhere and can be checked, right? So the auditor has to be able to find the proof of what you're saying and of how you are conducting your business. One other thing that also is important to note when you are thinking about incorporating and making sure that you pay only 0%, like you pay nothing in Hong Kong, your business is incorporated in Hong Kong, and provided that you are only conducting like offshore or only conducting foreign source income and business activities, you will not pay any tax on your revenue and on your profits. However, what is happening when you are taking out dividends? Like, you also have to think about where is your tax residency as the founder and shareholder of the company, because maybe Hong Kong will not tax anything, but when you take out the dividend, like, does the country of your tax residency, your personal tax residency, will tax you somewhere? Because we also always, like, if you have been listening to our channel, we always say that it is not just one tiny piece that you have to think about. It's the holistic approach that you need to maintain and make sure that where is business tax residency, where is your business paying taxes, or like maybe paying but at 0%, but also where is your personal tax residency. Like, if you have a tax residency in a country that doesn't have like tax treaty with Hong Kong, maybe the profits or the dividends that you're taking out from your business will be taxed in your home, like tax jurisdiction country, at your personal level. So just setting a company in Hong Kong and making sure that you pay 0% tax, corporate tax on your foreign sourced income, does not automatically mean that the general tax bill that you are paying from your personal tax to your business tax remains at zero. So this is something that you have to pay attention to. You have to make sure that the two parts, like tax residency of you as a person and tax residency of you as a company, aligns and provides you with the opportunity to pay 0% tax in general. Before you establish your tax residency, before you establish the company in Hong Kong, make sure that those countries have good relationships and have tax treaties, and you will not be taxed at a personal level. In addition to the considerations that we've talked about in regards to how to make sure that your Hong Kong company does not come to you with a huge tax bill at the end of the year, you also have to think about, like, it's not difficult, but it is a process, and it requires you to be involved. It requires you to have all the documents. It requires you to sometimes push your auditors to finish everything on time, because there are certain deadlines that you have to provide, and you have to submit all the documents according to the deadlines that the Inland Revenue Service has for you. So it is very important that you keep track of that. And also one thing that I've seen with our clients is sometimes, so you establish a business, you have everything set up, and you are sure that it is going to be deemed as a foreign source income, but throughout the years you may add some new activities or some new items to your business, and you have to make sure that all the new things that you are doing also fall under the foreign sourced income checkbox and will not be deemed as like sourced in Hong Kong. As a final note or item that I want to share with you guys is that within the same company, you can technically have a foreign sourced income and also a revenue that is generated in Hong Kong. So the way that it would work, for example, you have a business that has two types of activities. Like one is completely foreign sourced. You don't have Hong Kong clients or like you don't have any employees in Hong Kong. But at the same time, maybe you have like 5 clients that you provided the same service to in Hong Kong. And the way that it would work is your tax advisor and your auditor, they will check that, okay, you have a 20 million revenue in the calendar year and you generated like 18 million through foreign sourced income, through foreign sourced business, like you didn't have any Hong Kong clients, you didn't have employees in Hong Kong, etc., etc. But the 2 million was generated through the client that was, for example, a Hong Kong resident or a company that was established in Hong Kong. So because this 2 million will be considered as generated in Hong Kong, you have to pay tax on that. And you have to pay tax on that and also on the net profit from that revenue. So basically what your auditor will do, they will split your revenue in 2 parts. One is foreign sourced income. They will say that the 18 million is not to be taxed at 16.5%, but the 2 million, because of this, it is a Hong Kong sourced income, so it needs to be taxed at 16.5%. And if you have all the documents and everything, you will only ask to pay the tax on only that amount. It doesn't spoil your foreign sourced income at all. It is very, very important to make sure that you have all the documents to show that the 18 million that you had from foreign source clients is actually from foreign source clients. And you have to make sure that you have sufficient information saying that these clients are not connected to Hong Kong. I didn't have any employees, any business operations in Hong Kong. And the way that I conduct my business is from outside of Hong Kong. But just for maybe you don't want to say no to the money on the table. So of course you would have a Hong Kong client, you wouldn't say no to that, but just differentiate and make sure to document everything. I have some clients who at the end say that, okay, it doesn't make sense for me to take on all that extra maybe paperwork that I would have to do with Hong Kong clients. And they just say that, okay, I'm not gonna have any revenue from Hong Kong clients. Or maybe the business itself is conducted in a way that you do not even have to work with Hong Kong clients. And now that we have established that you can indeed operate a Hong Kong company and pay 0% tax in Hong Kong, there is one question that you should also ask yourself, is this the right structure for you? And we established that it has to be right for you as a person and for you as a business, and also it has to be right with the business activities that you conduct. As we said, if you have a real estate connected business, the tax exemption cannot work for you. So it is very important for you to think about your personal business tax and activities that you would be conducting, and make sure that just because it works for your business partner or for your vendor will work for you too. And now that we have established that you can actually incorporate a Hong Kong company and conduct your business in a way that you don't have to pay any tax in Hong Kong, the question that you should be asking yourself is this the right fit for you personally and for your business? And ask the questions what is my business activity? Does it go and comply with the request that the Inland Revenue Service has set? The other question is, where do I pay my personal taxes, and would that work in combination with Hong Kong? And the fact that it works in general, the fact that it can work for your vendor or for your business partner doesn't automatically mean that it will work for you. So make sure to plan, ask the questions, and plan accordingly. And if you have any questions, you can always reach out to Nomad Capitalist, and we will be very glad to help you.